In terms of fixed strike vol, we were up 1% on S&P on the week. You can see quite a lot of red here. So vol fixed strike was still coming in. So reasonable drop, probably about if you look at these upside calls, order of magnitude of 1 vol point drop in December. Expiries a little bit less, maybe 3/4 in January. But in general, this kind of area of 46 to 48 really taking the brunt of the hit. And that takes the implied vol in that area to a 9 handle. So I don't know if you remember a few weeks ago, I was saying that the upside still has a lot of room. It can get down to about a 9 vol, and that's probably where it's going. Well, we're here now, right? So into the holiday period, that's what they did. They took that front end upside to about 9. Now, personally, and this is more from muscle memory, I'm of the opinion that this 9 vol is kind of near the floor. Sure, it can go lower. And, you know, I remember 2017, I think I saw it a 5 handle. It can go a lot lower, but Realize needs to go a lot lower as well. Right now, Realize is tracking at about 10. So Realize tracking at 10, don't expect this stuff to go at 5 or 6, right? So if Realize starts to pick up again, then I think 9 is going to act like a bit of a floor. If Realize falls off a cliff and goes to 5, then the game can change, right? Personally, I don't think the game's about to change. I think liquidity in the market is such that we will probably get a bit more realized. So yeah, I think we're looking at a point where you probably want to think about covering any short volatility positions, which is why I'm probably going to monetize these VIX puts that I've got on. And yeah, that's kind of what we're seeing in fixed strike vol. The VIX curve dropped by another vol point across the curve pretty much. VIX spot got to 12.5, the lower than the summer levels this year, and pretty much levels we haven't seen since 2020. VVIX, though, did refuse to go lower, and it held at 83. It was actually higher on the week, which took the VVIX-VIX ratio to a pretty explosive level of around 6.66, which is quite frightening if you're a religious person. And then rolled down steepened to about 11.5%, which looks pretty steep now and unsustainable, I would say. So I think it's more a function of the overshoot in the front end. VIX 1 month beta dropped to 2.7, which is clearly showing that the VIX is running out of downside. This is something I talk about a lot in my courses when we're teaching people about how to use VIX, VIX futures, VIX options. We say the reason we care about VIX beta is because the VIX beta is your main signal that shows you if the VIX is running out of room on the downside. And if it is, it means that using VIX options and VIX futures might be a better alternative to hedge your portfolios than using S&P puts, right? That's why we closely monitor that VIX beta. And then VIX option flows, as usual, we tend to see call buying in terms of the bigger clips. So we saw some December and January calls being bought in various strikes from 15 up to 19, using that weakness in the VIX into the holiday period to scoop up some relatively cheap protection. All right, that is your quick and dirty weekly summary on this Thanksgiving weekend. Hopefully you get a chance to watch it before the market opens up next week, and I'll catch you all next week. Thanks.